In this video, we are gonna test another trading strategy to see if it's as profitable as its creator claims. Hey everyone, my name is David, and in this channel I talk about everything around trading, specifically Forex trading. After testing two trading strategies from Forex forums, this time we're gonna test a strategy from a YouTube channel. This strategy is suggested by one of the members on Baby Pips. The strategy is from a YouTube channel called The Trading Channel that belongs to a person called Steven Hart. Steven claims that this strategy is a winner with a 60% winning rate and a 1 to 1.4 risk to reward. Well, Steven, thank you for your generosity to share this strategy with us, but I wanna test that by myself, just in case. But before that, let's see how we need to execute the strategy and what are the rules. So let's watch the part of his video where he explains the strategy.
So for the rules of the pound Swiss strategy that we are going to take a look at, the rules for this strategy consist of two very simple conditions. The only two conditions that this market or this strategy is using is a cross of the 20 period exponential moving average, followed by a close below candle for a bearish trade or a close above candle for a bullish trade. That is the only conditions. I will go through a couple of examples of these. Not back testing yet. I'm going to back test with you in just a second, but just to give you a couple of examples, here's a losing trade. Why is it a losing trade? And why did I place this trade in my back testing? Because we have a close below the 20 period exponential moving average followed by a close below candle. So all a close below candle is, to give you an idea of this entry reason, is a candle that closes below the low of the previous candle. As you can see, close of this candle is right down here at the bottom of the body, and we do in fact close below the low of the previous candle, the wick of the previous candle. For a bullish entry, what do I need to see? I need to see a cross above the 20 period moving average. As you can see, we were below the 20 EMA right here. We then cross above the 20 EMA with this candle. After crossing above this candle, I need to see a candle that closes above the high of the previous candle. It needs to happen immediately after the close above or below of the 20 EMA. For example, this would not have been a trade. Reason being, we have a close above our 20 EMA, the orange line on the screen, but we do not have a close above the high of this candle afterwards. The close above the high of this candle needs to be immediately after the close above the orange 20 EMA. And let's go look at one more example, and then I'll start teaching you a little more about backtesting and a little less about the strategy. I'll also share stops and targets with you. So here, again, we have a situation where this market, did we cross the 20 EMA? Did we close above it? Yes. Immediately after we got to close above, this is the bullish version, immediately after we got to close above the 20 EMA, did we then get a candle that closed higher than the high of the previous candle? That answer is yes too. So in this specific case, we have a valid entry. After our entry, I used an ATR +5 stop loss. ATR indicator, I have a full video on it. I'll put it to the top right hand side of the screen. It's just an indicator that gives you the average of the last 14 candles that were printed on the chart to help out with volatility in the market. When you're using a stop loss, it keeps you from being whipsawed out because the market goes super volatile at once. All right, so ATR +5 on that candle would be 17 + 5, which is 22. And I'm using a 1.4 to 1 risk reward. So we got 22 on our stop, 1.4 up here. And the stops and targets are, as you can see, this one actually hit targets, which is why you see the green line on my screen. So in this case, that is the entire strategy. It's one of the most simple strategies I've ever tested and produced some really good results. As you can see, once I zoom out, here on the chart, your red lines, let me make sure you can actually see that. The red lines are losses, the green lines are wins. As you can see, going through a long period of time, blues are wins and orange are losses over here as well. I just started trading it and testing it a little bit differently. I optimized the strategy, which I'll do a video on next. But right now, just pay attention to red and green being wins and losses. As you can see, there's periods of time where we have 4 losses in a row. So as I said earlier, it's not like you're winning every single trade, but if out of 100 trades, I can win 60% of them, And in this specific case, on the 1 hour chart, this was from the beginning of 2020 to now. So let's call it 6 months. So in 6 months, this produced, again, a 60% chance to win. So all we do is get our 60, subtract the 40 losses from the 60 wins, we have 20. That means with a 1% risk on your account over the last 6 months, this would have produced a 20% gain on that account. Imagine if you were a little more risk tolerant and wanted to risk 2% per trade. That means in the past 6 months on the pound Swiss 1 hour chart, and of course you can't get every one of these trades. That's another important part of backtesting we'll talk about in a second. I'm just showing you how profitable something as good as 60% accurate with a 1-to-1 risk reward can actually be. We have 40% gain with a 2% risk on this one pair. Now what if you had 5 pairs you traded this with and they all produced similar results? Every 6 months, 200% gain with a 2% risk. It's insane how quickly things can grow when you start adding currency pairs.
As you saw, according to what he says, you can gain 20% after 6 months, only if you trade 1 pair. And he continues, if you add more pairs, you can have another 20% for each pair. So according to what he says, I can trade the 28 major and minor Forex pairs, and after 1 year, I can gain more than 1000%. Wow, isn't that great? I can do that only by a simple strategy based on one moving average. And it can get even better. I can code that easily and make 1000% every year without lifting a finger. Okay, Steven, let's test that one more time before pouring money into this holy grail. I won't use the method that Steven uses for backtesting. I have a better backtesting tool. I'm gonna use FX Plus Simulator, which is a free backtesting add-on for MT4 and MT5. I made a video about manual backtesting. You can see the link on the top right of the screen right now. Anyway, I'm going to backtest within the same time period as Steven did and follow his exact money management rule. 1% for stop loss and 1.4% for take profit. The backtest will be on the same pair, GBP/CHF, and I set a fixed spread of 3 pips for it. This is the average spread of pound Swiss among Forex brokers. You may pay more or less regarding your broker. If you want to know the average spread of your broker on different pairs, you can find it on my FXbook website. Of course, if your broker is listed there. Anyway, I'm gonna take 100 positions exactly the way Steven mentions in his video. I'll speed up the backtesting process because it takes too long. But you can slow down the video by going to the setting on the bottom right hand corner and select playback. Then slow down the video so you can watch any taken position better. I'll be back after the backtesting is done to show you the results. In the meantime, I'll put some quotes from Mark Douglas, the author of Trading in the Zone, one of the best trading books that every trader needs to read. Well, it didn't turn out exactly like the Steven's result. Actually, it's the opposite of that. We not only made no money, but the account went in the red and suffered a loss of around 13%. So what's the takeaway from this video? First off, we can't just drop a moving average on the chart and try to make some profit by using a higher than 1 reward to risk ratio. We need an edge. The second takeaway is when something is too good to be true, it's definitely not true. Okay guys, if you want to see other backtesting videos, they will appear on the screen at the end of this video. I also put the link in the description below. If you want to see the future backtests and also encourage me to make better videos, please subscribe to this channel and hit the notification bell. And also like this video if you found it useful.